Hello, everyone. Welcome to day 2 of our home buying forum. Today is assembling your team, and we'll tell you a little bit about our speakers in a moment, but we're glad you're all here. We do want to just let you know that we are in webinar mode. What that means for you attendees is that we cannot see you, we cannot hear you, so feel free to join this webinar if your kids are in the background, if there's still snow days, or if you have noise or you want to eat your lunch, that's fine. We can't see you, can't hear you. However, we do welcome your active participation in this webinar. And the way that we're going to ask you to participate is putting any questions that you have into the Q&A feature of Zoom. So if you do not see Q&A on your toolbar on the bottom with Zoom, like where you do muting and whatnot, look on the right-hand side. There are 3 dots that say More. Go into More, select Q&A, and you can practice if you like. Only the panelists will see it. If you want to tell us where you're joining from, or if you have a question on the top of your mind right now, feel free to put it in now. We are going to get to questions, including those that were submitted ahead of time, toward the end of the presentation. So use the Q&A feature. That will be the best way to reach us and get your questions answered, and we'll do our best to answer them. This presentation is being recorded. It will be posted on our YouTube and sent to you because you've registered for this webinar, so you will get it. You'll also get the slides sent to you. So don't worry about writing a ton down. We will be putting some links into the chat, but you will also get all these slides and have all the links from those. So you can kind of relax and just, learn and get your questions answered. We also are going to send you a link for a survey, a post-workshop survey. We do value your honest feedback. We read them all. So please feel free to let us know what we could do better, what you liked, because we do change all of our presentations based on the feedback that we get. So thank you for that. And I think with that, we can move on. So I am here with Sharon Cummings. She's one of our mortgage loan originators, or one of our senior mortgage loan originators at Harvard Federal Credit Union. My name is Jen Fries. I am the community engagement manager for the credit union, and I've been here 2 years. I'm a certified credit union financial counselor, and I also am a homeowner. I have bought and sold properties in New England and in Massachusetts and in New Hampshire. So I kind of have some of that experience buying and selling condos and homes just over the years. So Sharon has more than 2 decades of experience with helping our members to get to their home buying goals. And Sharon is mostly based in the Harvard Square office, but all of our MLOs can, reach out if you end up making a connection with somebody. A lot of this is done now virtually, yes. And so it doesn't particularly matter which branch somebody is at. Sharon, thank you for being here today.
Thank you so much.
Yeah. Okay. So just to give folks the outline of what's been going on. Yesterday, we heard from 2 of our other senior MLOs, Ryan and Daisy, on the home buying process. Those are also going to be posted on the page you went to register on. Eventually, we post them all there, and we post them on our YouTube. So if you missed that, you can check it out. Today, we're going to hear from a realtor, Dino Confalone, and an attorney. Sarah Ricciardelli is here, and really delighted to hear from them. That's what we're calling assembling your team. Tomorrow's webinar is going to be on affordable home buying. We're going to hear from the city of Cambridge and the city of Boston about their affordable home buying programs. And the last thing I just want to make sure I let people know about is that tomorrow night we were planning to have that margaritas event. You may have registered for it. due to the weather, we have pushed that back 2 weeks. You'll be getting an email. I just want to say it out loud too, that that event is no longer tomorrow night. It is going to be Thursday, March 12th. And we look forward to having a margarita or a mocktail with you at the Painted Burrow in Harvard Square. Uh, and just to reiterate that again, here's another slide. It's just to tell you it is a new date. Please don't come tomorrow. I know it would take a lot to get out tomorrow, so for sure we would love to have you join us. Maybe this new date works better for you. If you were already registered, we're holding a slot for you. If you were registered and now cannot make the new date, you can send the email you get, you can reply to it and send your regrets, and then we'll know to take you off the list. We'll invite you to some other things if you like later. So with all that said, I think it's been a great start to the Homebuyer Forum, and we had a great conversation yesterday about the whole process and what to expect as you're getting ready to purchase a home. Before we dive in, I do always like to just answer. I feel like a lot of times we get the question, what is the difference between a bank and a credit union? Or what is a credit union? So I know a lot of you on this call are already members of Harvard Federal Credit Union, but I know some of you are new to the credit union or are not a member. You don't have to be a member to be here and learn. That's fine. However, we are open for membership, and you can feel free to check us out on our webpage. We are, in essence, not-for-profit banking. We're owned by our members, and we, are not set up to make a profit to give to shareholders. Any profits get reinvested back in lower fees, better interest rates, anything to help our members, as well as like we're community focused, so things in the community. And we have lots of great products and services, and mortgages at the top of the list today, but we will, you can do anything with us, you can do it with your bank too. So you can get a CD, an auto loan, a high yield savings account, a Roth IRA, all the things you can get. And we're very convenient. Nowadays you can do stuff on the app, you can bank online, but we also, even if you leave the area or leave your job, where you join the credit union, you can continue to bank with us, just like you would with any other bank. If you go somewhere else in the country and you need to do in-person banking, we have a whole shared branches network, and that's available on our website, and you can go in and to another co-op or credit union and bank just like you would bank with us. So there's a lot of great things that are available. However, I do want to say for mortgage lending, we only lend in
New England and Florida.
Okay. New England and Florida is right now the only places we lend. We do have members other places. So it's certainly something we look at and, let us know if there's the demand for that. And because that is something always under discussion about other places that we could lend. I know we got the question yesterday about California.
Absolutely.
So for today's agenda, you're going to hear from Dino Confalone, our realtor, about the current market conditions, and helping you figure out how to start your search or how to refine your search, whatever it may be. You're going to hear from Sarah Ricciardelli, who's a very experienced real estate attorney. And then we're going to do Q&A. So we're saving a lot of time for your questions. Put any of your questions into the Q&A feature of Zoom. We also have ready questions that you submitted ahead of time. So if you already did that, we have them. Now I just want to introduce Dino. Dino is with Sotheby's International Realty, Gibson Sotheby's, sorry. He's a past president of the Greater Boston Association of Realtors, and a current, I believe, executive team member of the local and state association. He has more than 3 decades of experience that he brings to the table. He is someone who puts down roots himself, and a soccer coach and involved in local charities, and has received a number of industry awards. So we're really delighted to have Dino back with us again, and I am going to turn it over to you now, Dino.
Thank you so much, Jen and Sharon. I really appreciate the introduction, and I'm very grateful for this relationship with Harvard. I love the new branding. I've been with you guys for almost 3 decades, and I've been lucky to be one of the realtors that you guys rely on over the last decade. So thank you again. I really appreciate it. Um, Good afternoon, everyone. Welcome to our seminar today, and hopefully we'll be able to provide you with some information from an educational perspective and be able to answer all of the questions that you have. So, Jen, if you just want to start with the slides, then we can just get going. Thank you so much. We're quickly going to talk about the market data, some trends, and then industry news. There's my titles. I am the current chair for the Greater Boston Real Estate Board, which I'm honored to be. That's the oldest in the country, established in 1889, and we have 4 divisions within that real estate trade organization, which has just been it's phenomenal for Boston. So where we were and where we'll be, real estate in the news, and then we'll end with some Q&A after Attorney Sarek is able to get through her slides as well. Thank you. Go ahead, Jen. So projections, I got this from the World Economic Outlook update when it comes to how things are going within the global economy. I know there's definitely some turbulent times that have happened over the last, I would say 6 months or a year. But overall, we're not anticipating a complete um, implosion. It's hard to like look at it from a global perspective, but we definitely are just going to kind of bump along the bottom, if you will, over the next year. So this is a good slide that just shows where we were, and it shows the estimate in 2026 this year as 1.8, just down a percentage. On to the next slide. Actually, I think this is the slide deck that I sent. I don't think this was on there, Jen. Is this an older one?
Okay, hold on just a second, sorry.
That's okay. I had removed this one.
Okay. Let me,
I'm so sorry for the confusion.
no worries. Would you like to share or would you like to have me take a minute and just
Yeah, I
do
can
it?
do it.
Okay. Um,
So do I hit share? Can you guide me
yep,
through that?
yep. You should be able to hit the share button at the bottom. Sorry, everybody. Thank you for bearing with us. Looks good.
Yep.
Um, okay, you're sharing your whole screen, but that's okay with us.
There you go. How's
Okay.
that look?
Looks good, but you probably want to hit the present button at the top.
The what?
Let's see. Do you have the up at the very top? Yeah, there you go.
Apologies for the confusion.
Okay,
A little
you're all
bit about
good.
myself and on to the next one. Oh yeah, this is the one. See, it had the role of the realtor in the process. So in general, and this is something that Sharon will probably end up talking about when it comes to interest rates, what I wanted to do is look at it from a big picture perspective. And over 50 years, the average interest rate is close to 8%. And so basically, the I mean, obviously in 2020 and 2021 with the COVID outbreak, rates were in the twos and threes. But at this point, we're definitely anticipating rates to be in the sixes over the next year. So I think, in general, when it comes to rates, I think it's actually never a bad time to purchase. And one of the themes is that, and this has been over 3 decades of myself being in real estate, you marry the house, not the rate, because of just rates going up and down. But overall confidence is there, and it is strongly advised to purchase. And what basically reinforces that is looking at appreciation over the last 2 decades. And I've used this slide basically over the last 5 years, looking at appreciation. And what happens is when you had the financial collapse in 2008 and 2009, for those that were in the industry, we saw just a slight bump. Or I would say it was stagnant for about a year or two, but then it continued to appreciate year over year. If you look on the condo side, there was a little hiccup last year with condo sales. There was a huge amount of luxury condos in the Seaport. They were kind of accumulating days on market. But overall, single families continue to appreciate year over year. It's extremely desirable to have a single family freestanding property. And if you guys have any questions at the end, please just write them down and we can go through them as well. So that is from a global perspective when it comes to purchasing rates. And then when it comes to what's happening in the industry, we basically are confident that the next year is going to be okay. There were some recent changes that happens in the real estate industry that all first-time home buyers and regular home buyers should be aware of. So in August of 2024, buyer agent agreements are required now by law. Secondly, in August of 2025, renters no longer have to pay a commission unless they agree to a rental contract with an agent that's going to help them find an apartment. And then lastly, in October of 2025, buyers now have the right to a home inspection. And that is brand new. That literally is you cannot waive home inspections any longer. I know that was basically a crazy thing that happened over the last 5 to 10 years that always made me uncomfortable when people were waiving inspections, because just from a liability perspective, it just puts you in a really bad position.
And Dino, I'd want to make sure people know that these are laws that are in Massachusetts specifically. We do lend in the other New England states, different laws there, but that's important for people to know. Here in Massachusetts, you have all these rights now. So
Thank you so much, Jen. Yeah, and if you have any input, please just, when I'm going through it, just add that in. I really appreciate that. So when it comes to hiring a realtor, the word realtor means that, let me see, hold on. We abide by a code of ethics. And that is something really important. So basically, there's a difference between a realtor and a real estate salesperson. And the realtor basically takes this position very seriously and joins the National Association of Realtors and basically, again, abides by a code of ethics. So I do believe that there's something really strong behind someone that takes this industry seriously. So I do believe that you really should hire a true realtor and make sure that you ask if the person is a realtor or not. Recommendations are great. Someone that has established themselves and proven that they can actually help through this extremely tedious and difficult process. When you do select a buyer agent, I would highly suggest requiring a home buying consultation, whether it be in person or via Zoom. It is really important to basically go through, I would set maybe 30 minutes or 45 minutes to go through first of all, the buyer agency contract that is going to be required. You want to know what's in that, and you want to make sure that's going to be in the next slide. But I feel like you need to know the inner workings of how this industry works, what the flow is, and basically what your requirements are as the home buyer and also for the agent. The realtor really should be full-time, well-known, and established. I know that there's definitely a lot of people that get their real estate licenses, but this is such a challenging industry, and there's so many intricacies that I do think you have to commit to someone that really is taking this seriously, because you never know. You never know what can happen. So buyer agency contract, ensure there's a specific time frame, beginning and end date. And then also make sure that you're clear expectations are on both sides and what you guys have to do. For example, on my buyer agency contract, I make it known that I'm the person that contacts the seller agent, because there's dual representation in Massachusetts. So you have someone that represents the seller and then someone represents the buyer. And I do both. So I help people sell and I help people buy. I do not do dual agency. I only select one or the other. So I'm never like, there's no conflict. And a lot of the good realtors will not have dual agency. I think there's definitely a crossing the line. So I want to make sure that you know that there are clear expectations in what each person is doing. Um, and then clarification of how your buyer agent receives compensation. And this is important to note with the italics down the bottom. In our region, that's in Massachusetts, sellers generally continue to offer buyer agents compensation. In this scenario, buyer agent compensation comes from the seller proceeds. If the seller does not offer buyer agency compensation, the buyer is responsible for this expense. So just be very, very full transparency on how this contract is going to work and who's being compensated. That is one of the biggest things that came down with the legal regulations that happened in 2024 was the clarification of relationships between buyer agents and buyers. A realtor will exclusively represent your interests, be your trusted partner, and go through the entire home buying process with you from start to finish, and act as the quarterback between all professionals involved in the transaction, seller agents, inspectors, lenders, and attorneys like Sarah. So it is definitely a team effort. I personally recommend a team effort when it comes to the Harvard Credit Union. I mean, I've been working with these guys for 3 decades, and I trust them 100% that they're going to get the job done. They're going to have the best rate. They're going to have the hand-holding process. We need a white glove service. Being able to pick up the phone, that's something that I know Sarah does. A lot of the inspectors I recommend. I think it definitely needs to be a team effort and through the process towards the end. And then when the closing happens, everyone is all on the same page. And it's definitely a good feeling to get through that together. When it comes to tools for real estate industry, the most important thing to know is that there is a primary database called MLS, Multiple Listing Service, that all real estate agents across the country access. So when I represent a seller and I put the property into MLS, it gets pushed out to all the periphery sites, which is like Zillow, Redfin, Trulia. And those, again, are all periphery sites that pull from the main database. And that's important to know because all the accurate data is in MLS. Sometimes it gets skewed when it gets pure spit out to the periphery sites. So just be fully aware, speak to your realtor, make sure that they are using the MLS and you'll have the most accurate data, if you will. It's also important to access your local city and town wherever you're looking, the assessor's database to make sure that the data is accurate that's being presented in the MLS. So the MLS is a data entry system that realtors put properties into, and every once in a while, not that they're meaning to do it, there could be something off when it comes to the size of the unit. So just make sure or the bedrooms, just make sure you're accessing the assessor's database. And you have the right to go into the building department and investigate to see if there's any open building permits. That's extremely it's a challenging and difficult question to ask, especially when you're down the road and 3/4 of the way purchasing the property. I know Sarah will attest to this, that getting getting basically being made aware that there's an open building permit or like even right at the purchase and sale, which is the second contract, it causes so much stress, and just that's something that you should be doing in advance. And when I get down to the timeline, we'll talk about that because there's a due diligence phase, which is the next slide. So here we go. Obtain the pre-approval process. This is the timeline. That's important. It's imperative to have your relationship with the lender and have a pre-approval ready to go, and then you can get into the market and basically get ready to make an offer. Basically, you could have these usually, and this is something that Sharon can talk about, if it's like a 90-day pre-approval that expires after that. But it is important to have that document in advance because then once you get into the market, if you do find the right house, condo, whatever you decide to do, you want to make sure your ducks are in a row and you're ready to make that offer. And then you have, as you can see, it says down here 10 calendar days. That's going to be your due diligence process to have your inspection and basically investigate with the building department to see if there's an open building permit. If it is, that's going to be part of your offer, basically to say, you know what, to the seller, there's an electrical permit that was opened in 2024. Can you please have that closed before I buy the house? Because it's a can of worms and you don't want those to be open. So there's definitely Massachusetts is a two contract state, so you basically have an offer to purchase, and then you have your due diligence phase, and then you have the purchase and sale that solidifies everything from the original offer. And in Massachusetts, usually the attorney gets involved right around in the purchase and sale. They're going to draft that document and review it with you. So then the realtor is basically doing the offer right now, going through the due diligence, and then this is when the attorney kind of gets involved, is around the purchase and sale. Once that document is executed, the appraisal's triggered. You submit your formal mortgage application, then we go through the appraisal process, and that basically verifies the dollar amount for what you agreed to buy the house for. Then you get your mortgage commitment, and then you have the close. And all this takes about, I would say Harvard could probably do 30 days or so, but I usually anticipate a little like 30 to 45 just in case. And you should definitely make sure that you have a plan in case something happens. Your team is going to make sure that you get to that close date. But I just want to make sure that you're aware that you never know, something could happen. But with a good team, hopefully you get through it. And that's where we are on the timeline. When it comes to a sunk cost, that means a cost that you won't get back. So with the offer amount, this is usually, I would say 5% is your deposit with the property. The offer to purchase deposit and the purchase and sale deposit will come back to you if you're able to make your contingencies. So the contingencies are the inspection and the mortgage commitment. So as long as you go through those, and if you trigger one of those contingencies, you'll get your deposit back. The sunk costs are the inspection expense, which is usually like $500 to 2,000. They're pretty expensive, and anticipate that going through a formal inspection is extremely important and legally required now. So just make sure that you know that if you do back out for some reason, you're not going to get that money back. That's considered a sunk cost. And then also the mortgage application fee with the lender. And Harvard tends to, like, if you do end up backing out for some reason, that's a discussion to have with Sharon. And that's the timeline. So if anyone has any questions on this, please jot them down and we can go through the Q&A afterwards. And so then basically you marry the house, not the rate, as I said earlier. Focus on what makes you happy. Where do you see yourself in 5 years? It's really important to just have that plan in place. Do not wait, get pre-approved, start looking. And in my opinion, values will not decrease. There has been some market volatility. There has been this concept of sellers listing way too high, not speaking to a realtor and making sure they price it correctly. And all my listings last year that went on the market, I tried to price them correctly and they sold. If a property is not priced correctly, those are where you're seeing the decreases in value. And that's, again, from a data perspective, it is definitely prices that were too high and then end up selling for what we should have expected them to sell. And then lastly, please hire a buyer agent to represent your interests. You need an expert to guide you through the process. And then on to Sarah. So Jen, I'm done with mine.
Okay.
Do you want to
We did have
take
a
it back?
question that maybe you want to answer now, which is what percentage is the typical buyer agent compensation these days?
So, I mean, it's a discussion between your realtor and a buyer. I mean, I personally, and I full disclosure, I can't speak for other agents, but in my buyer agency contract, I do ask for 2.5%, and that goes to Sotheby's. So that is what I end up writing into the offer, and I ask the seller to basically pay for compensation. That's how I handle it. I can't speak for
Okay.
others.
Okay. Thank you for that. I think the other ones we're going to save for the end because some of them
Okay.
I think are duplicative to things that we had already from the pre-registered questions. So just to
Oh, yeah.
recap, I
Stop
think
sharing. Yeah. All right, you
just
take
to
it back.
recap that you're going to
Thank you.
want to have your pre-qualification letter with your loan officer. So Sharon, you might be the first step for a lot of people to go ahead and get that, which, Dina was mentioning the pre-qualification
Yes.
letter.
Yeah, absolutely. We strongly suggest meeting up with one of the mortgage loan officers, sitting down. We can have a conversation. You don't have to jump into pre-approval and pull credit, but a conversation is the best place to start and give you an idea of the overview and the process and the affordability.
Yeah. So we don't want people to feel like you have to know everything before you reach out to our
Right.
mortgage loan officers. We're here for you. They're great about helping walk you through the process, but once you're pre-qualified, then that's when you would be looking for that realtor that Dino was mentioning.
Yes.
You're going to be learning about the market, maybe even before you plunge in, you're learning about the market, and then you go out there and start your search with a realtor. Um, as Dina mentioned, being flexible, I think, about your outlook. I know when I bought my house, um, we saw it at first, and I have a city house, so they're often very small. So we saw the house and we're like, it's too small. And no, we're not going to make an offer. But then we just kept driving by there. And then it was sort of like, you know what? Maybe we want to go see it again. And we were lucky enough that it was still around. Maybe they had priced it a little high at the beginning or whatever. And so we were able to put in an offer. And it's funny because like now I think back on it, how we thought it was like way too small, you know what? I raised my kid there and it's been great.
Perfect.
I mean, yes, would I've wanted a bigger house sometimes? Of course. But for me, the trade-off was right because I actually really like living in the city and for other people, bigger house, a little further out, maybe, or something. But you will find the right house for you. You have to just think about what's important to
What's
you.
important, right?
Yeah.
Absolutely.
And our mortgage loan officers can help you figure out like what you can afford. And I think that that's really helpful as well. So let's see. Now I'm going to ask Sarah to come back on camera, hoping that I have the correct slides for you, but I believe that should be all set. Sarah Ricciardelli is at Ricciardelli and Small. She's founding partner of this law firm. All they do is real estate. So I think one of the things she might mention, and certainly that I recommend, is you do not want your all-around Joe lawyer friend to be your real estate attorney.
Yes.
As lovely as it is to have a person like that, just to maybe ask a couple questions to, you really want someone who specializes in real estate, and attorney Ricciardelli has more than 25 years of experience
Now
representing
30.
now that, okay, so a little old in the bio, but yes, a lot of experience. And you don't know you need it until you do. And then something weird happens or unusual, like, and then to have somebody be able to step in, whether it's an experienced realtor who knows the market, knows the local market, or an experienced attorney who can help keep you from making a very expensive mistake. It really, it makes all the difference in the world. So thank you, Sarah, for being with us again. I'm going to
Thanks
go
so
on
much.
mute again. So, okay.
Thanks so much for inviting me. Yes, hit 30 years this year. I can tell you a little bit about myself. We are, as you mentioned, just specialized in residential and commercial real estate. I've got to change that 25 to 30. I feel very old at this very moment. We've been doing it all this time, and that's all we pretty much do. We do some ancillary work, but pretty much it's just the residential and commercial real estate. As mentioned, it's really important not to have someone who dabbles in this. Same thing as a broker or a lender. You want someone who does this full time and not a part-time person. There's a lot of dates and deadlines and things that need to be taken care of when you're doing this type of work. So you want someone who's really focused on that and has the team and the experience to deal with it, as mentioned, if problems happen. We do condominiums, we do single families, we do multifamilies, we represent buyers, sellers, and lenders. And you might see a difference in my purchase and sale arguments depending which hat I'm representing, if I'm representing a buyer or seller. And that also comes from years of experience. And I've had situations where another attorney will send back my rider that I use for a buyer when I'm representing a seller, and I mark it up intensely, and they argue, well, that's your rider. I said, yes, it's very good, but I would never accept that as seller's counsel. So really depends which hat we're wearing. Next slide. Okay. So, Dino had a great timeline for from beginning to end and how that all works. And as he mentioned, I step in when the offer is finalized. Sometimes I'll step in early. That usually happens if you get some sort of unique clause you want to add to an offer or something unusual that's not a fill in the blank. We've had a situation where someone wanted to use the property for a horse farm, better put that into the offer. And so that type of language we looked at. We have a recent situation where it's a very unusual situation, and then doing a rent to buy situation where some of the money from the rental is being used to purchase the property. And so that's live time happening right now. And we're trying to work out the nuances. So they brought me in early on that offer because the language isn't some sort of standard language they could just fill in a blank on. But the offer has certain fill in the blank sections. As Dina went over it as well. Financing, appraisal is not a fill in the blank. I'll talk about that one in a minute. Inspection contingencies. People brought in questions about home sale contingencies, which I'll also talk about in a minute. If they're buying and selling at the same time, you're going to put in your closing date, you're going to put in your purchase price, inspection, as was mentioned, and all of that will be in there. And also, if it's a condo, you're going to add a condo doc review. You also want to add if anything's included in the sale. Are they including all appliances? If they're including a washer dryer, list it. I can't tell you how many fights I've had in 30 years about whether a washer dryer is an appliance. It clearly is, but the argument is always made. Sometimes if there's double appliances, we've had it where there's two sets of washer dryers or two or sometimes three sets of refrigerators. You want to put in three refrigerators, two washer dryers, all of that should be specified. So really important to be specific with what's included. If you saw a nice island that doesn't look, tied down to the floor, make sure you list that as an inclusion. And if we can, I think, on dates. So dates matter on that. You want to make sure that you put dates that you can live with, and you want to make sure that you put dates that your lender can meet, and you want to make sure you put dates that your inspector can meet if you've connected with an inspector. And so all of that should be listed on there, so that because once that document's signed, you are bound to those dates. And if you pick a closing date where you're going to be in Aruba or Mexico or Europe, that's a problem because in Massachusetts, you do have to sign a wet signature. If you're coming from other states or you have relatives from other states who are advising you, make sure you're aware that in Mass, it has to be a wet signature. We have no virtual notaries. We had it for a very brief period of time, and I don't think many attorneys utilized it during COVID, but that's gone. So you do have to sign in person. So keep that in mind. Next slide. So you have the offer to purchase, and that is a very simple document. It's 2 to 3 pages, pretty boilerplate. It is a binding document. Other states have a one agreement kind of state. We in Mass have a two agreement state. It's very unusual to many other states. And what that means is you're going to sign that short offer to purchase, which is 2 to 3 pages, and then then you'll be bound once that's signed, and then you'll get into the purchase and sale agreement. And so the differences between those documents, which Dino touched upon, is at the offer phase, you're usually putting very little money down, maybe 1,000. Some people put a little bit more to show that they're serious about the offer, 5,000. I've seen 10,000, but 1,000 is the general amount. And so that's the amount that, let's say you sign that offer and then you decide for no reason, I don't want to buy this house. The most that you're at risk as a buyer is that $1,000. So you want to be really comfortable with that number, understanding that if you default or you try to get out of it for any reason other than a legitimate reason, the $1,000 at risk. Once the purchase and sale is signed, the amount of money at risk is much higher, as Dino also mentioned. It's 5%. So between that offer phase and that purchase and sale phase, do a lot of soul searching and make sure that, yes, you want to move forward with this deal because you're putting a lot more money at risk. Um, the offer is signed usually very quickly, and then there's a period of time, as Dino also mentioned, between offer and purchase and sale. You'll do your inspection during that time. You'll do your due diligence during that time. And what do we mean by this term due diligence? People have asked me that. So during that time, you want to, if it's a condominium, review the condo docs, review the condominium financials. If it's not a condominium, you want to, or actually what a condo too, you want to check permits on the property. I have a very unusual situation right now with a city on the North Shore where we did our due diligence and we found that there was an open permit on the property. we do a courtesy call for clients. We're not zoning attorneys, but we always do a courtesy call and say, hello, town person, are there any permits open? Some towns have it online, others do not. In this particular situation, we found an open permit and we asked the seller to close it out. That was entered into the purchase and sale. We got it during our due diligence, entered the purchase and sale. And unfortunately for the seller, which I felt terrible about, but better than for my buyer, the town came back and said there was work that was supposed to be done on this permit that wasn't done. And now you have to go do the work. And the estimated amount to do the work is $33,000. That was a little shocking to all of us, and the seller especially. And so we had very little time because it was a quick deal. And so, in order to make my client, the buyer, feel comfortable, we were able to negotiate double that amount, $66,000 in escrow, and a contract that says the seller is responsible for any excess if it goes beyond that. Because once you start doing construction, you don't know what kind of can of worms you're opening and what might come up. So and that was just a matter of a simple phone call to the city saying, hey, are there any open permits on this property? I never anticipated the type of permit would cause that much construction, even myself. And I don't think the seller's attorney did, and definitively not the seller. So due diligence time period between offer and purchase and sale is super important to get that type of stuff nailed down. So condo doc review, checking on permits. You might want to check the area of the property. Another real-time situation is we had a client who was buying a very expensive home in the Boston area. And he said, there's something weird. The property next door has a dumpster, a commercial dumpster. Well, come to find out, it was an establishment for recovering addicts. And my client had small children. He had concerns about living next door to that. And so I understood. And as a result of that, he wanted to terminate the deal. They did fight a little bit about the offer because it wasn't the offer deposit because it wasn't a contingency. But in the end, they did let the buyer out and their deposit of $1,000 was returned. So these are the types of things that you want to look for during due diligence time, because again, all that's at risk is generally around $1,000 versus the 5%, which is a much larger deposit in the second part of the transaction. So the terms of the deal, so there's main terms versus details, and the offer is just very simple, as I mentioned. You don't really need an attorney unless you're getting an unusual situation. For the purchase and sale, instead of 3 pages, it's 15 to 18 pages. And so you need a really experienced attorney to help you and to figure out what should be in that, what's allowed, what's reasonable, what's customary. If I were doing a stock negotiation transfer, I wouldn't know what's customary in the industry. If I were representing someone in the entertainment industry, you wouldn't want me. I don't know what's customary in the industry. But when you're working with someone buying a home, selling a home, you want an attorney who does know those areas so they can know, oh, this is industry standard, they're wrong, or this is totally unusual, you don't want to agree to this. And so that's really important. Once you sign the P&S, that's the deal, set in stone. If it's not in the P&S, then it's not agreed to. So you want to make that's your last chance. If something got missed in the offer, and again, you should try to put as much in the offer as you can for unusual contingencies. But once you get to the purchase and sale, and it's not in there, then it's not in the agreement and it's not part of the deal. So you want to be very, very careful in that. If the inspection yields issues and you want that taken care of, sometimes a credit is the cleanest way and just doing a credit towards closing costs or something along those lines. You have to have that in the purchase and sale. The worst scenario would be a broker doesn't advise his client or an attorney doesn't advise his client. You sign the purchase and sale, and then the buyer says, what about all the inspection issues that I wanted to get taken care of? It's not going to happen. You've waived your right. You've accepted the property as is at the time of the inspection once that purchase and sale is signed. Or if it was waived, then as of the time of the offer. So keep that in mind when you're signing these. These are real contracts and binding. One of the contingencies I touched upon briefly is a mortgage contingency. And if you want a mortgage contingency, that has to go into the offer. And there's boilerplate language in the offer for that. You fill in the amount and you fill in the deadline. And again, speaking to Harvard about, what dates to put in there for a mortgage contingency is very important. So what is this mortgage contingency? It's a time period by which your lender has to give a loan commitment that says, hello, buyer, we commit to giving you this loan. And if they don't give you the loan, or if they give you a commitment letter, I should say, with a gazillion contingencies on there, and there are some lenders, I won't name them, who have a tendency of doing that. It is not Harvard. And they'll have 30 contingencies. It'll be contingent on an appraisal, contingent on contract review. That piece of paper is worthless. And it gives you no comfort that the bank is definitively giving you the loan. So, what would happen in that scenario? Let's say you're a buyer and you're doing this commitment, you get your commitment, and you have no attorney, or you have an attorney who's not seasoned enough to say, when you get your commitment, send it to me so I can review it. And you let that commitment contingency pass, that mortgage contingency deadline, which is going to be in your offer, pass. If the bank, 2 weeks before the closing says, I'm not giving this loan anymore because the condo was not acceptable or because the appraisal came in low. If you can't figure out a plan B to close, then your 5% of the purchase price is at risk of forfeiture. Doesn't matter that it wasn't your fault. You chose the lender, they gave you the commitment letter, you let the contingency pass, now your 5% is at risk. So it's really important, and Dino expressed the working of team. I can't stress enough how good it is and the difference it can be on a deal to have a good team versus a non-seasoned team. I work with, Dino often, and I know that he's watching the deal. And I work with Sharon a lot, and I know she's watching the deal. She'll call me and conversations that will happen on the sidelines. She'll call me and say, Sarah, I'm really worried about this meeting this commitment date. Probably should be ready to extend. We're waiting for a few more documents, or this is in a flood zone. We don't know anything about the flood zone yet. All of that might be happening and trying to save you the stress of dealing with it. And so we'll jump ahead and say, okay, we're going to extend this commitment and we'll extend it on your behalf to a later date that's comfortable with meeting those deadlines. If you have a lender that doesn't communicate, and I get frustrated when lenders don't respond to me, or if you have a broker that's not watching this inspection stuff and saying, hey, buyer, how did that inspection look to you? Are you good with it? Do you want anything on it? Then it ends up being on the buyer dealing with all this stress. And my goal in this is to make sure that you're educated and that we're trying to alleviate as much stress as possible. Some things I can alleviate, like this permit for $33,000 worth of work. Of course, I had to discuss with the buyer and go through and explain to them the risks and all of that. There was nothing I could do to fix the problem prior to closing. It was never going to happen. So those types of things really help when you have a good team on your hands. And so that's, when I started my practice 30 years ago, one of the things I've said since then, and we have a team of 7 attorneys and 10 staff, and I say it to this day, is that there's no I in team. And there isn't. We all work together trying to make sure this is as pleasant a process as possible. And the best compliment I can receive, and one compliment that I love receiving, is to hear a client say, thank you so much, you made this so easy. Because that's how it's supposed to be. The stress is supposed to be on the broker, the attorney, and the lender to get this done for you and make this a happy process. You're buying a home. Nobody wants to see you stressed out. And so having a good team to do that can help alleviate some of that stress. Next slide. Okay, so now you've gone through the purchase and sale. There's a lot on those pages. I couldn't go through that in this time period, but when you get to it, we'll go through it with you and answer questions. So now that it's signed, what's next? What's your next step? I hear this from clients a lot. Okay, now that the PNS is signed, what is it? What do I do? The first thing you have to do is work with your lender to get financing approval. In Massachusetts, unlike other states, time is of the essence. And so that means that those deadlines in that purchase and sale agreement are real. There's no flex date. Like some states, I think New York has a flex date where you have a 30-day time period where you can close. It doesn't work like that in Mass. So you have to be wary of those dates and make sure you get the lender everything they need to get the time done. The closing date is a firm date, and you can only change it with the seller approval. So you want to be careful of that. If you have a good lawyer who's experienced, they're going to help you track your mortgage commitment date. They're not responsible for it. You still have to put it on your calendar, but they're going to help you with it. And as I said, the lender calls, Sharon calls and says, Sarah, I need more time. I'm going to reach out to the seller's attorney and make sure that you have the time so that your deposit's not at risk until things look good. And Sharon's going to issue a wonderful commitment letter with very few contingencies, which is going to make me very happy and your broker very happy. And then the next part is during that time period, your attorney or the attorney that represents the lender because sometimes if you have an attorney that is not on, we say, the list of the bank, they cannot do the closing. And so it's nice to have your own attorney very few select scenarios. But most of the time, what streamlines this the best is to have your attorney be the closing attorney for the bank. And that's because then they're in control of the transaction. They control the time and place. They're the ones who are going to do the title search and know firsthand whether there's a problem on these documents. And you're not having a third party doing that. So that's incredibly helpful. So we're going to get the title commitment. We're going to review the title commitment and the title exam. Those words are used interchangeably, and see if there's any defects or marketability of title issues. Um, a lawyer, or at least in our office, what we'll do is if there are title issues on that, we're going to send you an email and we're going to say some very common, like utility easements happen all the time. But we're going to send you an email and say, hey, we found this passageway, this utility easement, whatever it is on the property. Here's copies. We're happy to go over questions. Some attorneys don't do that. They won't send title issues to the client in advance, and they'll have them look at it at the closing. I don't believe in that. I think you need the time to review and feel comfortable and ask your questions. So you're not being, thrown all this information at closing. At closing, people are stressed, as I said, and they don't have the time to properly process all of that. If it's a single family home or multifamily home, we'll get a plot plan of the property. Condos don't have those. They have a plan that's in the condominium documents, but we'll get a plot plan of the property to show you that. Um, and we're pretty good, I think, at discovering issues. And we're dealing with a plan, I can't even, I'm saying this, from 1925 right now, where the plan was handwritten on at the registry, and it's not the right plan. And so since 1925, for years and years and years, everyone's been looking at the wrong plan. When we actually pulled the actual plan, the lot numbers and the layouts of the property are totally different. So that's a bit chaotic right now. Luckily, the seller had title insurance, so we're working with title insurance to fix that problem. And it's not just for this house, it's the whole street. And I can't believe since 1925, nobody figured out that issue, but it happens. So a lawyer should be there to answer your questions. I tell my clients all the time, we are on a flat fee arrangement at my office. You call me, I answer your question. The only thing that would ever be outside of that is if you went into a dispute with the seller and that becomes hourly, and that's more like a litigation kind of thing. But we're on flat fee. Some lawyers are not. They'll be hourly. So if you're hiring a lawyer, make sure to ask them that question. Do you work on a flat fee arrangement, and what would cause you to go outside of that flat fee? Will help to resolve any issues that come up in the transaction. We have extensions, amendments, all sorts of things that come up. We've had fires come out at a property. We've had floods at a property. All of these things can happen, but again, having the right people on your side to help you navigate that can make it all the less stressful. Next slide. Okay, so closing day. This is very exciting. What happens on the closing day? So you will schedule your final walkthrough with Dino or your broker, and you'll go to the property. And what you're looking for is to make sure that the condition of the property has not changed since the time of the offer or inspection, depending on what the purchase and sale reads. So during that time, you want to open closet doors, look up at ceilings, open and close windows, check for what, could happen. And clients will say to me, well, what can happen between the time of the offer and the time of inspection? So much. We've had, as I said, fires, we've had floods, we've had rodent issues, all sorts of things. We once had someone leave, and I can't believe I have to say this, get a snake in a freezer. It was their pet. That was a bit alarming, so we had to deal with that issue. People are usually upset if it's torrential downpours during their walkthrough. I think it's the greatest thing ever, and here's why. If you have a torrential storm between your offer and your closing date, you're going to know if that roof or window or whatever can hold, and if there's water coming through. And if water comes through, then it's on the seller to repair that prior to closing. So no issue with rain. You don't want to wish rain, but you might want to wish rain so you can have your house tested one more time. You're going to wire funds to our law office. Checks okay for the purchase and sale, or a lot of times these days they do deposit link, but at the time of closing, you'll need to be able to wire. So make sure that you've checked with your financial institution and that they have the ability to, you have the ability to wire. Closing is essentially a formalization of the terms of the purchase and sale. And what that means is, back when I first started 30 years ago, we used to call it passing papers. And that's literally what it is. It's a huge stack of papers, and you're going to be signing it at the closing attorney's office, which is your attorney or whoever represents the lender. And you're just passing them back and forth, going over the final terms of the note. You can't negotiate the terms of the loan documents at the table, i.e., the interest rate or the years or anything like that. All of that has to be done before the closing. All the closing is just passing papers and signing documents and make sure that it matches what you were promised as far as rate, as far as closing, as far as terms of maturity, and all of that. So it's not the time to say, I heard rates went down, I want a lower rate. You can't do that. It's never going to be changed at the table. So you want to make sure you keep that in mind. And then after the signing, the last step is recording the documents. And so those will all get recorded at the Registry of Deeds. This is also unique to Massachusetts. Other states don't have this. And so you'll sign the documents, and then you are not the true owner until the deed is recorded. And so there's a waiting period after you sign. People like, oh, good, now I can go into the house after you sign. And that's not the case, because the final step is we have to take those documents and record the Registry of Deeds. Generally, it's the same day. But this week, with the snowstorm and the registry being closed Monday and part of Tuesday, it doesn't always happen. And so I was telling the group before we jumped on this, yesterday at the end of the day on a deal that I had closed, we were 70th in line. So that's not normally the case, but it can happen. And so everything got to record today, which means the buyers can't move their home until today. And so someone had asked the question about what if you're buying and selling in the same day? And this sort of comes into play with that. And here's why. If you're trying to sell and need those proceeds to buy, you can try to do it on the same day. That poses some risk, like the scenario I'm telling you, because if you can't close on your sale and have the funds available for the purchase, which is on the same day, you might be in default on the purchase. So the best way to alleviate the stress is a couple of ways. One is to sell, put your stuff in a storage bin or keep it on the moving truck, and then wait a day, close, make sure the purchase is on record, and then move in. So you're paying for some storage costs. I know it's not ideal, but it definitely saves you a bit of stress. The other way, which I'm not a fan of, but I understand it makes it a lot easier, is to do what's called a use and occupancy. And this is where the seller of a property stays on the property for a couple of days. And during that time, they can live at the property they've sold. They don't own it anymore. They're not a tenant, they're an occupant, and they waive all rights to being a tenant. And then once the purchase is on record, they move into the purchase. So here's the risk of doing that and why I don't like it. One is from a liability perspective, because you're on somebody else's property, and if damage is caused, then you're liable. Two is if the movers on the move out from the sale cause damage to the property, then that becomes complicated and you're liable. If the appliance breaks, and I've had this happen, we close and literally 3 hours later, the boiler stops working or the oven stops working. Now it's post-closing and you're responsible for these items. Or if there's a catastrophic issue, the roof collapses. And I'm not saying it would happen on most homes, but if it did happen, you as a seller, even though you no longer own the property, are now responsible. And you have to worry about things like insurance for the coverage of that. So there's some risk to being an occupant and a use and occupancy. And so that's why scenario one, where you have the moving truck, hold it for a day or two. And even though there's a cost, is sometimes the least stressful way of doing it. You're going to have to find a place to live, obviously, those nights, maybe with a friend, or something, or a family member. But that to me is the safest way of doing it. In Massachusetts, also, one last comment and some below, only a lawyer, not a lender, not a title company, or a real estate broker can give you legal advice. And I know clients sometimes reach out asking for legal advice and they can't. In Massachusetts, we are an attorney state. We are a little bit of a pain, as I've mentioned throughout. We have a few unique scenarios as opposed to other states, but we are a lawyer state. So you can't have other people giving you legal advice, and only a lawyer can conduct the closing here in Massachusetts. Next slide. So some final advice, and I've said this a little bit throughout the whole webinar. Purchasing a home can be a stressful process. It is one of the largest financial transactions of your life. You can buy a car, you can do your wedding. Maybe that's depending on the extravagant wedding, that might be a little more expensive. But buying this home is probably the most expensive thing that you're ever going to do. Why would you not set yourself up with a team who's seasoned and knows what they're doing and who gives good advice and can help you through the process? Why would you want to be with someone who does this part-time? Do your due diligence when you're reaching out to brokers, attorneys, and Harvard, or just hire the three of us. I mean, we obviously know what we're doing, but you want to pick a good team to surround you and find out how available they are. Will they be available on weekends? Will they be available on nights? I can't tell you how many emails I've answered nights and weekends. And if I'm away, my team is on it. I have someone who monitors my emails and makes sure that they are getting answered and that, or they're reaching out to me if it's a much more serious problem. And I don't mind because I know that it's stressful and I want to make sure my client's happy. I think that's the final slide. It's been really great working with you or speaking to you. I'm happy to stay on and answer any questions. There's a great team over here. I know Harvard does an amazing job and Dino does too. So I would strongly consider keeping them in your Rolodex.
Thank you
Thank you,
so
Sarah.
much, Sarah.
Yeah, of course.
If you go into the Q&A, Sarah, someone has put in a little personal note who worked with you before and is really glad to see you again and helped you her a
Oh my
lot.
God. That's
So
so
I didn't,
funny. Thanks,
yeah.
Julie. Appreciate it.
Okay, we're gonna just, before we jump into the questions, we just have a couple things we want to tell you. So we did talk about this yesterday, but Sharon, tell us a little bit about having Harvard FCU as your lender. What should people know?
Well, as a credit union mortgage loan officer, we take pride in our work. We're committed to our members. We will stand by you from the time you come in with questions through the transaction, through the closing, through the servicing. We do service all of our loans. Everything's done in-house. Everything, for the most part, except for closing, is electronic if you choose. We're a portfolio lender, which is very helpful if you run into a little situation that something's a little bit unique and we need a little bit, let's say a condo and it has a little bit of a different, more commercial space, or somebody owns more than 2 units. We have commercial portfolio lending capability, which is nice. So we can make things work most of the time. Sometimes we can't, but we do have a little bit more flexibility than other.
And I think you talked about portfolio lending also for folks who are high earners but high student debt, like a physician might
Yes.
need that, because otherwise the ratios look off to
Yeah.
if it's just like a computer looking at you, they might be like, no, but
Yes.
the answer could be yes, right?
Yes, we do have a physicians program that we do help with someone that may have student loan debt that may be we may be able to help them qualify for a higher loan amount based on somebody who that doesn't have the physician loan program. And we also, for instance, we do a lot of properties on leased land. We can handle leased land where other lenders do not handle leased land. A lot of condos, some condos may be on leased land, and we do a lot of properties,
Yep.
mortgages that.
Those are complicated, right? Yeah. So, okay. Anything you want to talk about the rates or down
Yes,
payments?
yes. We do competitive rates. We do a rate survey all the time. We try to stay as competitive as can be. We do offer discounts. We have a program that if you have a checking account with the credit union, Elite Checking, you get a discounted rate with the credit union.
Okay.
And our rates are published daily, and we have plenty of products that we can find something that's going to meet your needs.
What about first-time home buyers?
First-time home buyers, we do give a credit, a $500 closing cost credit to help
Okay.
you pay towards the closing cost. And once again, I think the service alone, just starting with somebody from the very beginning and going till the end, helps first-time home buyers, because it is a stressful process. And as Sarah said, we try to take the stress out of it for you and try to make it as happy and fun as possible.
Agreed. Yeah, I remember my first purchase that was super stressful, and I didn't know about Harvard FCU then, but I wish I did. And can we just let people know, first-time home buyer is a little bit of a funny saying because some people qualify even if they have owned in the past. Can you say anything
Yes.
about that?
Yeah. We look at it if you have not owned a home in the past 3 years, you'd be
Okay.
considered a first-time home buyer at the credit union, and you would receive the discount of the first-time home buyer credit of $500 that we offer.
Okay, wonderful.
We do have other programs. I do want to mention 3% down programs that we do a lot of. So we do have a lot of flexibility, whether the down payment is not necessarily you have to put 20% down. We
Okay.
can do a 3% down program, and that helps first-time home buyers a lot.
Yeah. Yeah. I think I did a program like that when we first bought. I remember scraping together from everywhere we could to get our down payment the first time. But it's a little easier once you're in the market. In Massachusetts, it's so hard to get to the market. Once you're in, your property might go up and then you have some equity to work with, right? The
Absolutely.
next time. Because I know some people on here are talking about that, like selling one house, buying another. So I know that people are coming from all different places.
Yes,
Yeah.
different. Yep, exactly.
Okay. And I know because I've seen some of the letters and testimonials that are sent in about Sharon, how much she walks people through this and is such a reassuring presence. And, I've seen like the thank you letters afterwards and that kind of thing. So it is definitely true that having that person with you who can kind of is both knowledgeable and helpful and wants to see you succeed.
Exactly.
All that is so
Yeah,
key.
it does.
Yeah.
It does. Yeah.
If you're on this webinar and maybe you're a ways out from buying, or maybe you're worried that you wouldn't qualify, can you mention actually minimum credit score?
Yeah.
Or-
Minimum credit score, we say 620. However, I strongly, strongly suggest everyone check your credit score.
Mhm.
There's a impact to your credit score based on rates and private mortgage insurance. So the lower your credit score, maybe possibly the higher the interest rate gets.
Yep.
So at the very beginning, before you start, having a pre-approval, sit down with a mortgage loan officer. We can go over numbers with you, kind of give you an idea, but get an idea of what your credit score is, because it's going to be extremely important, and it's going to help you qualify and get you the best interest rate. The better the score, the better the interest rate, and the cheaper is private mortgage insurance, which is if you put 20% less down, is based on the premium is based on your credit score. So credit score is extremely important, and it's good to have up front and try to work on it before you get into the pre-approval stage.
Right. And the other thing we'd like to mention to folks is that if you want to work with a financial counselor to improve your credit score, this is a great thing to do when you're like 5 years out from buying a house or 3 years out
Yes.
even. We recommend and we work with, partner with a group called Green Path. They are a nonprofit. They have counselors available who can help in multiple languages, extended business hours, and they can help you improve your credit, pay off debt, create a budget. Maybe you want a budget for what home owning is really going to be like. You don't have to be a member just by being at this webinar. If you want to speak to Green Path, you can visit that link. I think Terrence is in the background putting some links in the chat. And again, you'll get all these slides sent to you and the recording sent to you. So take advantage of Green Path if you feel like it would be helpful for you. We definitely recommend them highly. I do want to get into some of your questions. Apologies if this is going over and you cannot stay. Again, you will get the recording. So we're going to keep going. We're going to answer the questions, and then you'll get the recording sent to you. This one, I think I'm going to start with Dino and then maybe kick it to Sarah. What risks should we avoid when we're choosing a property, Dino?
So first of all, I went through the chat and tried to answer as many questions as I could.
Thank you.
And any legal stuff, I told them to refer to either Sarah or from a lending perspective, contact Sharon.
Okay.
But when it comes to things to avoid, I mean, I went through it on my slide. Number one, obviously you need to do an inspection, legally required. But then, as Sarah mentioned, the building department is a can of worms. So that's like the number one thing. It just is like, I can't even believe how bad some things are sometimes. I mean, I personally, when I was renovating my kitchen, I didn't even realize my GC did not close the permit. And so I had to go back and like I had to go to
Yeah.
town hall. So that those are things that I think you just got to have. It's really just like an inspectional thing. Just make sure that you're getting into the right situation, if you will.
Anything
Yeah,
else you want to mention, Sarah?
Yeah, no, I would agree. Due diligence, as I touched upon, is super important. So really use the time to do your due diligence and figure out what works, what doesn't work. I agree with Dino on the building department. It's an absolute disaster. Most of them are. This one that I was dealing with the large one that I mentioned, I cannot believe the city did not reach out to the consumer or to the homeowner for years, not to mention, hey, you still need to do all this work. There's just no checks and balance.
Yeah. Dino, I'm gonna ask you this one also. What are your recommendations? Anything that we haven't already touched on about selling one house, buying another, can't afford both at the same time?
So it is, I mean, it's a challenging ask. I've done it multiple times. It has to be done strategically and make sure that things are aligned correctly. And the most important thing that I can say is to make sure you have a backup plan so you're not homeless. Because I think at the end of the day, you have to have a roof over your head because things, for some reason or another, sometimes don't align correctly. But just again, make sure that you have a good marching orders, a good structural plan on how things are going to happen and what have things that what happens if this happens.
Hmm.
Yeah, I agree. Think it through and really think about the things that could come up. If you have wealthy relatives, be really nice to them between now and then in case you need them for a backup plan. And I've had that happen on occasion.
Oh my
So
goodness.
that also helps just temporarily till you can sell your home.
Yeah, and we did mention yesterday, you're trying to avoid with your lender taking on additional credit while during this
Yeah,
process.
definitely.
So, and if you do need to do that, certainly communicating.
Just reach out, right?
Yeah.
Reach out to us and let us know that your car just, you need to get a new car loan.
Hmm.
We can add it into your debt to income ratio and say, everything looks good, you're all set, and we'll let
Yeah.
the underwriter know.
Yep. This one is going to be for you, Sharon, I think. How does someone calculate how much home they can afford? How big of a loan can they take?
Yep. So I always go back to the bar and have a conversation. I can give you our numbers that work for you based on a debt to income ratio. We try to go within maybe we use your gross monthly income, 38% to 43%. However, I always take a step back and say, well, how comfortable do you feel? I mean, we use gross income, so it's a little bit higher than what you're taking home each month. So I kind of rely on you to tell me how comfortable you feel, and then we work together and come up with that number. But industry, we try to stay within a debt to income ratio of maybe 43% or under of gross monthly income, and that kind of fold that back into how much of a mortgage you qualify for.
Hmm.
But take other things into consideration, some taxes on the property can be very expensive depending on the city or town,
Yes.
homeowners insurance, and then other expenses that you have that, we're not taking into consideration. One, for like childcare, we don't take that into consideration, but that is a huge expense that you want to take into your whole your monthly budget. So I always say just talk to the lender and don't rely on just a lender telling you this is what you qualify for. Kind of have a conversation and say, well, this is what you qualify for, but how comfortable do you feel with that?
Hmm.
That's my usually that's how I work.
Yeah. Okay. That's all great advice, I think. So, and you can also talk to Green Path if you want to, do a very detailed budget with them, because they're really good at identifying like, oh, these are some of the things that our people have seen in terms of expenses. And oh, I also just like to say I'm a Cambridge resident. I'm always trying to recruit people to come and live here. And yes, it is really expensive to buy here, but one of the things that is very unusual, you mentioned taxes.
Oh,
The taxes are very low in Cambridge for residential compared with other surrounding towns. So if you live in your house, there's a residential
yes,
exemption.
huge. Huge.
So just putting out my general goodwill to the world about come live near me. Okay, so I think this is a Sarah question. We had a few iterations of this, like somebody is buying out their partner.
Yep.
What kind of legal services do they need? Should they each have a lawyer?
They should each have a lawyer because even in the most amicable of separations, you certainly want to have lawyers on each side to make sure, one, that they can only protect one side of the interest, even if it's a family member, we recommend too. And that's because
Mm,
sometimes things come up and you want to have the ability to talk to someone who's just for you in that scenario and not, representing the other side so that you can get advice that's not tainted in any way. So we always recommend having two lawyers. I know sometimes people don't want for cost, But at a minimum, you should have a separate lawyer for working out the agreement. If you don't want to continue with a lawyer through closing, most of that, as I've mentioned earlier, is a formality, and buyer's attorney or closing attorney can draft the deed, so that could save a little bit of money. But you definitely want someone helping you structure the agreement so that you know all of your bases are covered on it.
And do you do that kind of service as well,
We
Sarah?
do. Yeah, we do. We've had several of those instances this year, probably more than that. Yeah.
Um, so what factors, this is a question I think I'm going to direct to Sharon. What factors would prevent a person from acquiring a mortgage? What can be done to fix such issues? So we've already mentioned your minimum credit score needs to be 620 to get a mortgage with us. If you are not there or you're hovering close, you might want to be talking to Green Path about improving your credit.
Yes.
And I know you really work hard not to be able to get people to the finish line of buying their house. So assuming they have a good credit, are there other things that are problematic that could prevent somebody from getting their mortgage?
Just be open and upfront, I think, with your lender.
Mhm.
Changing jobs could be, if you're in the middle of maybe changing careers and are changing jobs, and now that's a factor in the transaction. You want to have a conversation with your lender.
Yep.
Um,
Because they're going to need to you're going to need to verify
yeah.
income. Yesterday we went through that whole process, so
2 days.
that those videos will be available shortly. So
Yep,
yeah.
we will. We do verify income 2 days prior to closing, so we want to still make sure you're still at the same position. You want to make sure you have secure funds available. If you're moving money around from an investment, make sure it's done ahead of time so there's no surprises.
Mhm.
Just be, sit down with the mortgage loan officer, go through all the details, kind of go over all the figures and have your plan out, and try not to have anything surprises. Don't open up any debt during the transaction. Try not to anyways. Limited your money movement if you can.
Because you're going to need to account for
You're gonna
that.
have to account for that. Try not to make any large cash deposits. That's something we're not gonna be able to use if that's the case. So there's a lot of different things that could prevent the closing from happening. However, I think they're all avoidable and we could talk through it. Anything that comes up, just have a conversation and we can make it, we can figure out the best way to handle it going forward.
Yeah, and you're with them every step of the way. Like none of this are you on your own. That's why you need this good team that we've been talking about the whole time. All right, we already actually kind of answered this, I think. This one, whoever submitted it, I'm actually not sure if you mean your own age or the age of a home. So the first thing I'm just going to say is that we do not discriminate. It is illegal to discriminate in lending based on age. So your age doesn't matter. Your income might. So if you're getting ready to retire, talk to your MLO.
Yes.
But about age of the home, Dino, you want to say anything about that? I live in an old home and I know that there are issues, but I love
I
it.
think, I mean, it's the question obviously was kind of concerning for all of us because there are mass fair housing laws. But I think if
Yeah,
it's like if you're on the third floor, I've had someone that's retiring that has a bum knee. It's like I'm not living on the third floor. So I don't think at the end of the day I mean, it's
yeah,
only a factor if you make it a factor. If you can't make it up to the third floor, maybe you shouldn't be looking at third floor condos. That's
sure.
kind of where my head's at.
Yeah. We're redoing our bathroom right now. And I was like, you know what? Only getting older, we're putting in grab bars because we're like, it doesn't hurt to do it. And, but that's a whole nother conversation. But yeah, your age is not a factor as far as, you're eligible. So, um, okay. And I think, you've already covered this. The status of the home sales market is, um, that it's a strong market. And, there are some blips globally, right? But
Yep.
here locally, we've got a strong market going on.
So I mean, I have two Cambridge condos that I held off on listing this week. So there's definitely a blip because of the amount of snow that we've received.
Uh-huh, uh-huh.
But the general consensus in the market right now is that we just need to get past this insanity of
Hmm.
snow. And then I think over the next couple of weeks, things are going to start to pick up again.
Yeah, yeah, I'm looking forward to spring personally. Um, okay, so I think this is a Sarah question. Sarah, if you want to come back on screen for a
Sure.
sec. Yeah, I already own a home with my husband. We are planning to sell. I want to buy a home by myself. How should I proceed? This person didn't actually say, are they divorcing or are
Yeah.
they just doing something separate. So this might be something where they need to consult an attorney like
Yeah,
you.
yeah, exactly. I'm not sure if I understand. Yeah, go ahead.
Yeah, I agree. I think I'm not sure if I 100% know the question, but if there's anything you want to comment on here.
Um, Not really. I mean, you can certainly, if you're planning to sell it, unless you're talking about buying it at the same time, which I think we went over. But I'm not really sure what question here. I'm happy to answer it if there are some
Yeah,
welcome. If the person doesn't want to do it online, they're welcome to call me and I can certainly try to help.
yeah. I know when I went through my divorce, there was like this moment of like I had to buy my spouse out, my ex,
Right,
and but this sounds like someone who's going to go and buy their own. So they're probably looking to then pre-qualify themselves and
I,
talk to a mortgage loan officer too about what you might
right.
qualify for
yeah.
on your own.
This might
Maybe they
also
meant,
too. Oh,
yeah,
sorry,
maybe
go
they
ahead.
meant they couldn't be on both at the same time. I mean, you obviously can own both at the same time.
Mhm.
Um,
Right.
Oh yeah.
but
Maybe qualifying wise as
maybe,
well.
yeah,
If you're on the house jointly, it's going to be taken into consideration when you buy your
right.
new house if you're not off it at the same time. So
Right,
you'd want to
because
make
you're
sure
you're
you,
obligated to pay that mortgage
yeah,
if you're
a
still paying
tax, the
Exactly.
insurance, yeah.
Yeah,
So that might be.
yeah. Okay. How much is a typical down payment for first time home buyer?
First time home buyer, we do 3% down,
Okay.
up to, whatever you choose.
Uh-huh.
Anything under 20%, we do require private mortgage insurance. And if you sit down, we'd be more than happy to kind of run some figures for you to see how much it would cost based on, a 3% versus a 10% down payment.
Yeah.
Obviously 20%, you don't need the private mortgage insurance, but we do as little as 3% down programs.
Yeah, the more you can save, the better off you'll be in terms of a lower
Payment.
mortgage payment in the end, but maybe you just want to get in the market.
Yep.
And we already talked about the first time buyer deals that we offer, so okay. If Sharon, if someone wants to buy, should they do it before they retire or after?
Either way, but I would suggest that you don't do it right in between.
Mhm.
We've had members that retire and they haven't started collecting their Social Security or they haven't started collecting their pension. You want that in place before you move on to buy the next home because you want to show proof of income. Once you retire, it takes some time. Some people don't start collecting for, right away. So I would say make sure you have everything in place to proceed because if there's a time frame that you have no income coming in, it could be a problem for the mortgage piece
Right.
of it.
And it potentially, if they're making more at one time or the other before or after retirement, that could affect what they
Absolutely,
qualify
yeah,
for.
absolutely.
This person wanted to know about first time homebuyer assistance programs. We talked about our stuff. Tomorrow, we're actually going to be meeting with the city of Boston and city of Cambridge to go over their homebuyer programs. And they'll talk a little bit. It's going to be most relevant to people who live there in Cambridge or Boston. However, they're going to touch on some of the other programs that exist. So please do join us tomorrow for that if you can. And the last one, I think we've kind of already answered this, but it's about 3%, right?
3%
And
and then
plus
closing cost and
closing.
down payment.
Mhm.
Yeah, so depending on the price of the house, but
Yeah. So when you talk to your mortgage loan officer, you'll kind of get
we'll
a
go
good
through
sense
all
of
that.
Yeah. And here are our mortgage loan officers here at the credit union. You can reach out to any of them. The web page is here on the screen, harvardfcu.org mortgages, and you can always see our rates there. You can make an appointment
Absolutely.
to speak to Sharon or any of the other MLOs. We do, as I said, want your honest feedback. We'll send you a survey link, so please fill that out. And we hope that some of you can join us tomorrow for affordable home buying. In case you came on late, the Margaritas event for tomorrow night has been pushed back 2 weeks. You'll get an email. Please don't show up tomorrow. We won't be there. It's going to be hard to get here. Don't do it. But thank you so much to Sarah and Dino for, giving your expertise and to Sharon. I think this was a really helpful conversation and discussion.
Thank you, Jen. I
Thank you
appreciate
so
it.
much, Dan.
Can I ask you one question real quick?
Sure. Yes, please.
So there's a question in the chat. Do you want, Sarah, this is,
Sure.
Okay. Yeah,
can you
I can
see
read
that?
it. The first appraiser did it as a 1 bedroom, but the other owner complained, and although they did not re-inspect, The first appraiser changed the appraisal report to 2-bedroom. I hired another appraiser independently. The new appraiser is adamant it should be appraised as a 1-bedroom, waiting on the report. Stuck in the situation about the selling price. Any advice, Sarah?
So it sounds like a condominium. So if it is, then you have to refer to the condominium documents. In the condominium documents, there should be architectural plans that were recorded, which will show if this is a 2-bedroom or a 1-bedroom. And if it's a two, you can definitely use that to fight it as a 2-bedroom. If the architectural plans show it as a 1-bedroom, but at some point in time they renovated the home and made it a 2-bedroom, then there's things like you can go to the tax records to see if the tax records show it as a 2-bedroom, or just to argue that it's a legal 2-bedroom, especially if it has egress and all of that. I'm not sure why the appraiser's saying it's a 1 if it's being used as a 2. There must be some sort of legal requirement of the 2nd bedroom that maybe is not met. But at a minimum, they should definitively be able to call it an office or a den, which would add value to it as well. Um,
Okay.
but I would look for comps in the area that you can present to the appraiser as to why it should be, the pricing wise to help with that. And again, refer back to the condo docs on the architectural plans.
Okay. Thank you so much.
Yeah.
Thanks,
Thank you,
Sarah.
everybody, for joining us.
Of course. Thank you.
And we really hope our panelists are also going to be there at the Margarita event, our mortgage
Yes.
loan officers.
Mhm.
So if you want to meet people in person, we definitely would love to see you. So tomorrow, affordable home buying webinar, March 12th will be the Margaritas. Thanks, everybody.
Thank
so much.
you.
Thank you
Great
so
seeing
much.
everyone. Take
Bye.
care.
Have a
Nice
good one.
seeing you.
Bye-bye.
Bye.